I'm here with Gianni Kovacevic from CopperBank, who's just given a very inspirational talk on the importance of copper to the audience. And what I'd like to know, Gianni, is CopperBank was founded 5 years ago, and that was in a bear market for the metal. How have things changed?
It's been just over 4 years now, and we purchased another asset August of last year. We bought the Copper Creek project from Red Hawk, and effectively from its previous market cap high, we bought it at around 3 cents on the dollar. So that tells you the state of the industry. We believe the market has normalized. We know this. The copper price was $2 a pound at the low, and now it's flirting with $3. And Howard Marks always talks about cycles, knowing where you are in the cycle, and then you can assess the risk. We've been in a bear market now almost 8 years in commodities. So there's less risk inherently because look at what we're acquiring these assets for. So now the generalist investor, they're the ones that are going to move the needle for this whole industry. When you're so low for so long, all of a sudden, their risk is not losing money, it's the risk of missing opportunity. So I will suggest to you that from my global travels, people want to invest in this sector. It's been beaten down for so long, so it's perhaps next. But more importantly, as I talked about in my keynote, as we go through this hinge of history, electrification wins the marathon, and of course, metals and copper particularly, it's the enabler of electrification.
The company's strategy is to consolidate first-class assets. How do you apply that criteria?
We have three general criteria. One, our risk tolerance is our children have to be able to work at those projects. So we're not going to go anywhere where we can't do that. Number two, a meaningful amount of capital has been spent on these projects. It's a risky business, exploration, and we don't want to take the additional risk of not knowing what's there. So ideally our projects have economic studies. And three, they have to be projects that we believe in a normalized copper price environment, someone will want to move that project forward with us. I'm not going to build the mine, that's clear. So those three criteria have to be there.
You claim to offer a unique pounds in the ground investment vehicle. How do your criteria differ for other companies?
Well, first and foremost, we're owner-operators. 6 people own 50% of the company. We own a lot of equity. So we're highly motivated to create liquidity for the strategy. And we've shown that we're aligned with our investors because we've typically done all our financings to keep the lights on, if you will, for the projects. We've done this at a premium with no warrants. So we are unique in that respect. So also, we offer projects that we control on a 100% basis. We own royalties. We own a royalty, the one at Contact, which is the private property project that has no royalty assessed to it as yet. We own it. And now we're looking at owning other equities in the copper space so that for the generalist investor, we are a go-to name in copper, where you own projects, royalties, and equity with a core focus on copper.
You're an extremely well-known advocate of copper. Do you see its appeal continuing in the future?
Oscar Wilde used to say that a dreamer finds his way by moonlight, and his punishment is that he sees the dawn before everyone else. I am an investor in mining and commodities, but I cut my teeth learning power systems. So if you cut all of these, the future of energy, if you cut those applications in half, I know how they work. So I understand that today, for final energy usage, only 19% is electrification, and that climbs in the next 30 years or so to about 50%. What's the enabler? It's copper. But then when you superimpose this, what should be a very strong CAGR growth rate in copper, look at the lack of success in exploration throughout the entire China super cycle. We found a lot of low-grade resources, but not a lot of high-grade. And at today's copper price, the industry itself cannot convert those resources to reserves because it's not economic.
Are there any circumstances that would derail the electric vehicle battery revolution?
I will suggest to you that there are a couple of events that have taken place in the past couple of years we will look back at them as the definitive dates in this hinge of history as we go into the next century of electrification. The previous ones were the discovery of oil at Spindletop in 1901, the invention of the light bulb in 1879, where it really did change how things are done. When OPEC acknowledged at the November 27, 2014 meeting, when they collapsed the price of oil, That was the acknowledgement that we are now going into the age of electrification. Two reasons. One, the way we extract oil from formations around the world, that's changed. And number two, the application. The pressure that these areas that use oil, 56% of oil demand comes from transportation fuels. And there's pressure across the board, in my view, because of environmental pressure, technological pressure. You've got what's now definitively, the global automotive manufacturers are pivoting the way they fundamentally make cars to a platform at the chassis level into electrification. I don't see anything being able to derail that. That is where they're going. Nothing can stop it. And just look at the announcement that BMW and Mercedes did 3 weeks ago with their car sharing platform, because over and above all of that, young people don't buy cars. They want access, not ownership. And you put all that together, nothing can derail it, in my view.
Gianni, that's a very good point. For anyone interested in more details of some of those points, Gianni presented a very compelling case with slides this morning. Please go to the Minds and Money website for more details. Thank you, Gianni.
Thank you, Chris.